Good morning, Wale. Yes, I do agree with you with that regard. We have seen a bit of excess demand in any market. We've seen a bit of increased pressure for FX from internationals to repatriate their investment holdings. But we've also seen the CBN try to come and sell to meet some of the demand. But we have seen during the week, we had some deals as high as 365, but as at now we've seen the NE come down moderate slightly to about 362 levels. But we still anticipate there'll be more demand pressure in that market.
And I think many would say that it's unlikely that the foreign investors are going to get really interested in Nigeria all of a sudden. So this lull in supply could continue for the next few months. Now, in that scenario, do you think there is a real risk that we could see the naira perhaps weaken a little more to, say, 365, 366, and that could be the new normal level at the INE window?
Most analysts will agree that with the upcoming elections, there's a bit of a cautious approach being taken by the internationals, and this is affecting dollar supply. So yes, there will be extended pressure on the naira, and we might see a bit of further, I don't want to use devaluation, but along that line. However, we do know the reserves we have about 11 months cover for our reserves, and it's more than enough to meet any demand pressure that's coming to the market. The CBN is well enough enabled to meet any form of demand pressure.
So as we look ahead to the MPC meeting next week, what reaction do you anticipate from the MPC in terms of trying to keep the naira stable, especially in that critical INE window? Many would suggest that further tightening is off the table because to some extent we have already seen a bias towards loosening of monetary policy, especially at the last meeting. Would you expect any signaling from the MPC in terms of foreign exchange policy that could address the weakness?
I think what we'll be looking at the MPC, we might see amongst the committee members a greater an increase in the move towards tightening, but I don't think the overall consensus, I don't think they will tighten. I think they'll still keep the MPR rates at the same levels. I think in terms of rates, the CBN has been able to increase rates on its own through the new yields on the OMO and PMA auctions. However, in terms of the MPR rate, that has a larger ramification in terms of interest rates, lending rates, and many things. I do not think at this point they would tinker with that, especially as we go into the elections.
All right,
so
let's
still be stable.
Okay, then let's focus on the OMO auctions and the activities of the central bank in the daily money markets trading activity. Where do you see things going in terms of the OMO rates going forward? From the activity we've seen over the last few auctions, what's your estimate in terms of the direction of yields going forward?
Okay, so the last OMO auctions have seen rates rise, especially on the long-tenured maturities. And we've also seen market participants react to that by aggressively taking new positions in anticipation of further rise in OMO rates. We saw the OMO rates came out yesterday, coming to about 13.5 levels for the one-year paper, and which was fully subscribed. We had about almost 300 billion mopped up on the one-year paper yesterday. So it shows markets is anticipating that rates would rise. However, the CBN is also being cautious in taking rates further.
All right, so where do you see yields going in the short to medium term? Do you think we're going to see yields continue to rise, or what direction do you anticipate?
I still think we would see slight rises in yields for the next, especially on the long tenured maturities. However, for the short tenured, I don't think we'll see much rise from present levels where they are now.
All right, and then let's go back to the interest of investors. So it's almost safe to say that foreign investors are not going to get really excited about Nigeria until after the elections. What about the local investors' appetite? Do you see anything out there from the pension fund managers, for instance, that suggests that they may increase their appetite for certain types of fixed income instruments?
Yes, I think the hope or the anticipation is that the locals would take these new positions, being opened up with the exit of the internationals, because the yields are coming up higher. They're a lot more attractive than when they were about 3-4 months ago. So at 13.4 levels, 13.5 levels, it's a lot more attractive than last quarter. So I think there will be a bit more engagement from that side, yes.
All right. Well, Biyi,